Morning, welcome to One Financial Markets Morning Commentary. I'm Andrew Johnston. Yesterday, well, another reversal of the move from the previous day. At 8:30 yesterday, we had German manufacturing PMI came out. It was surveyed at 57.7, came out at 59.4, and that was a nice little buoyancy for the euro market. At the same time, Draghi was speaking at Jackson Hole. What he was saying was complete fluff. He was just stating how well all global banks had done to get to where they were, and how fantastic they were that they'd avoided global banking catastrophe, and how they're all great and all fantastic, and how it's all going to be great once they all stop quantitative easing, and they'll stop their asset buyback programs, and I'll start raising interest rates, and everything starts to normalise. He hasn't a clue. He has not a clue. So he was just basically saying how great everyone was, because just basically you're in the next room, you're in a hotel beside the governor of the Bank of England, or Janet Yellen, or someone from some of these other countries. So you have to say how great they all are. Otherwise, you're not going to get any drinks popped for you. So we had this moment of Draghi, but the main thing of the euro for the euro dollar at that time at 8:30 and continued to theme through the day was very, very strong German manufacturing PMI. The PMI measures the activity level of purchasing managers in the manufacturing sector in Germany. So a reading of 50 or above indicates expansion in the sector, where below indicates contraction. So 59.4. When a survey of 50.7 is a very, very good number. A higher number than expected should be taken as positive or bullish for euro, and if it's negative, it should be taken as negative for euro. And so this is what we had, a good data release up move, combined with a Draghi speaking and saying absolutely nothing. So speak no evil, hear no evil. Market doesn't try to interpret anything, so it goes up. However, let's just look at the euro dollar on a daily basis rather than the price action yesterday. And we're still in this consolidated range. Look at this. One day we're up, one day down, one day we're up, one day we started down. This is the battle between buyers and sellers at the moment in the market. And no one's really found where they want to be higher than this level of 116 and 116.30, say 116.30, 116.70, or they want to be lower than the 118.72 cap. So everyone wants to be in this sideways range now until something comes out, or someone gives further direction towards whether they should be trading higher, should be trading lower. If we look at our lovely euro sterling trade, which I've been going on about, that continued to. Unfortunately, this is a 15-minute chart, but let's look at an hour. We are having this appreciation and this flattening out and backing or layering while prices are filled. And look at this. I mean, it's giving you a chance at every period to get onto this trade, and it keeps appreciating. And I said once again, it was 93s was my first call. But it's just it's a really, really nice trade at the moment, where it gives you pullbacks enough to get onto the next level, and it's very, very tiered. It's in a step sort of formation at the moment. But yeah, so euro is doing all right at the moment, and euro against sterling is particularly doing well. For today, main ones: UK GDP at 9:30. GDP being the broadest measure of economic activity and health of a country. So higher than expected means should be good for sterling, lower should be worse for sterling. 0.3 is the survey, 0.3 is what's expected. Sterling at the moment has been dwindling off just with the Brexit stuff. And I don't even know who runs the country anymore. Theresa May, are you back from holiday yet? I've not read one thing about you in the paper. I do not know who's in charge of this country. We've got this Davis Day guy who's talking about Brexit and how we're going to get all these cracking deals and all this sort of stuff. Nobody has a clue about how they're going to handle this. And the ball is firmly in the European court. And they are laughing because we don't know what we're doing. It was supposed to be controlled, or it was supposed to be a vote by the people, for the people. And we were supposed to get what we wanted out of it, and I've really got the feeling now that this could be an absolute shambles, and sterling could take a real whack off this. 120, as I said before, has been cited. So let's look at sterling on a shorter time frame, or sorry, a rather longer elongated time frame. So it has been appreciating since we had that flash crash back in late August, and we have since this year we have appreciated and got back up to this trench channel here where we consolidated for a bit after the Brexit, but it's just not. We're still holding in it, don't get me wrong, but we break here, we're back down in this trench here of the 122, 125 level. And the GDP reading today could have some real effect on that. So we look at this figure, I mean, a 0.1, 0.2, I mean, they're bad. I've got a feeling it will come out at 0.3, bang in line. But the market is just sitting on tender hooks here in terms of how that plans out. It's very data dependent at the moment, and unfortunately we've got about 11 UK figures out between 9:30 and 11, which just compounds the kind of the way the data crunchers and economists try and break down the data and evaluate what's actually going on with the UK. To be honest, I think it's pretty much personally, it's a redundant figure in terms of the overall health of the country currently. There's other factors going in here in terms of global repatriation of funds, movement of offshore funds, bigger asset players, overseas asset players, moving their funds and their companies to other places. Those are the things that are really going to affect us in the long run. And a small hit or miss on the GDP figure isn't the biggest thing that we should be looking at. There's much more globally financial pending things out there we need to be taken into consideration. So the figure will be tradable, but we'll just have to see what happens on that data release. We did have some interesting stuff from Trump yesterday. Wonderful Trump. They say we'll shut down the government to build a wall. Yep, that's great. Along with that, many years ago, not many years ago, 16, 18 months ago, there was a problem, maybe 2 years ago actually, I'm losing my mind. There was a problem with the White House, with Congress, with the US, in that they were going to have trouble to find money to pay for their bills. There's having a slight argument internally. That's raised its head again, in that they got some government funding and federal debt limits to come to agreement on, and if they don't get it raised in a timely manner, they effectively can't pay their bills. Now Fitch, the credit ratings agency, said this will not affect their AAA rating. How can it not? A country suddenly says, if I go and say, sorry, I'm not paying my bills, my credit rating gets struck, so why wouldn't the US? Oh, yeah, don't worry, we're going to shut the government down while we think out this through how we're going to pay our bills. No, and also we're going to shut it down because Trump wants to build a wall. Absolutely insane. Not good, again, that we're in this situation where the US are discussing how do they come up with the limit, the debt limit, and if it's raised or not, and a manner of the so-called date of when it is, or just taking care of their business. They've just kicked the can, push this under the carpet, and along come it raises the ugly head again, and they have to deal with it. So Dow came off maybe 150 points yesterday, but it's still up in terms of trajectory, up probably maybe about 18-19% for since Trump came in, so he'd be happy about that. But generally, it's all of the stuff in the news wires is Trump related, and him just being so destructive, you would think, but not really affecting the markets in terms of equity markets. Dollar sold off in some of his comments as well, but nothing like ridiculously aggressive. So we just looking at Twitter, looking at hot headlines. We have GDP today. We have some US figures in the afternoon, mortgage delinquencies, initial jobless claims. Nothing really, I think, is going to rock our world. And then once again, we have some more more speeches from Yellen and Draghi tomorrow. But for me in the front lines, have a good trading day, and I'll speak to you tomorrow.